Hi, I'm David Paul. I'm the Managing Director of VectorVest in the UK. And what VectorVest does is that we rank and sort all of the shares in the London stock market by value, safety of earnings and trend. And we advocate buying safe, undervalued stocks that are rising when the general market is rising. We have a method of investing, a structured method of investing called worry-free investing that conservative investors can in fact keep the market under control in a few minutes each evening. And I presented the results of that at Core on many occasions. Today we're going to look at something more aggressive for a smaller part of your portfolio. First of all, the most important thing to know is whether the market is rising or falling. Everything follows from that. And this chart shows the UK market, and the UK market's had a good year. It started to move up. You can see that little green triangle in January, and then moved into a triangular formation. And last night, in fact, market broke out of that triangular formation, and the longest measure of the trend on VectorVest in the UK. In the American market, a very similar situation on the next chart, where we also got a buy signal in January, a sell signal at the start of May, and the American market as yet has not given a long-term buy signal. I would expect one to come in very soon indeed. But today I want to try and look at a more aggressive investment, i.e. gold. And that's the gold tracker, GLD, listed on the American Stock Exchange, which tracks the price of bullion. And as you can see, gold pushing up and finding a resistance at that top trend line. Can it break? Well, first of all, it's getting up there now for the fourth time, and many technicians believe that market will break on the fourth attempt. It's had a very good morning as I, in fact, record this on the 14th of June. On the next slide, we look at the shorter term picture, and as you can see, we have a rounding bottom, and then we have a textbook 5-wave falling wedge, which it's broken out of. And that bodes very well for an attack on that level. Then we can quite easily get up to about 1400, and that would be a cracking move in the gold market. In the next slide, I've got what happened this morning. And as you can see, a very good day, in fact, very good couple of weeks. I think that the one thing to worry about is that I put on two stochastics, a daily stochastic and a weekly stochastic, and both those are in fact showing that the gold market, in the short term anyway, is overbought. So I wouldn't be at all surprised to see a pullback from here before it goes again. So just be very careful at buying in at these levels. Those people that are Elliott analysts watching will note that the gold market over the last couple of weeks has charted 5 waves up. So I wouldn't be at all surprised to see a little bit of a pullback. And that pullback, in my humble opinion, would be an excellent entry into the gold market. So just be careful. On the next slide, we'll look at some picks. Now, this is my top pick. It's a company called Kirkland Lake. It's listed on the American stock market, and it's been in the throes of a very strong trend for quite a long time now. Now, the green line above the price action is in fact the VectorVest valuation, showing the share significantly undervalued, and the blue line study in the window below the price is earnings per share, and earnings per share growing strongly. And as Ben Graham said so many years ago, earnings per share growth is the engine that drives the share price. So it's broken up through the last old high, and that looks like an exceptionally good opportunity, both technically and fundamentally. So on the next opportunity, this is Highland. Now, I forgot to mention Kirkland has got assets in Canada and Australia. Kirkland, Highland, mostly Russian and the old Russian satellite countries. Nevertheless, it's broken very strongly from a triangular formation over the last few years. It's come back and kissed the the trend line defining that triangle and now moving up the page very strongly indeed. And technicians watching the flagpole should be repeated, and that's what's called a measured move, which would have a target in the share well above where it's trading at the moment. So that looks like it's an aggressive, all gold shares, ladies and gentlemen, are an aggressive opportunity. They need to be managed, and risk needs to be managed aggressively. And one moment of weakness can be, in fact, very detrimental to your account size. So these are not worry-free shares. They are aggressive trading opportunities, in my humble opinion, but that one looks good. The next one is Polymetal. And Polymetal has pulled back in 3 waves and found support, traded a double bottom at support a year or so ago. Again, those technicians watching that bottom was charted, that double bottom was in fact a 78% retracement of the big push up the page. It's run up, broke the trend line of falling tops and pulled back and kissed that on its way back up the page again. This particular share has got an exceptionally good mix of both dividend, it pays about a 5% yield, and in their management report they vowed to in fact hold that dividend, and it looks to me as if it can pay a dividend and grow that share price strongly, and is moving up very strongly over the last couple of days. And the last opportunity is a share that I know very well called Pan-African Resources, it had a sorry time as the gold price sold off. It's now pushing back up the page here again, and it's made that double bottom. It's got some very strong institutional shareholders, mostly South African. The largest South African asset management company called Allan Gray, they own 28% of it, and Investec Asset Management and Coronation Asset Management, in fact, own about 10% each. So institutionally quite strongly held. If the gold price breaks and breaks that resistance that I spoke about at the start of the interview, then I think that there's a lot of upside in Pan-African Resources. So 4 aggressive trading opportunities in gold stocks, not for the faint-hearted. And as I said earlier, risk needs to be managed aggressively and proactively. And if you haven't got what it takes to manage risk, then leave gold stocks well alone.